Well, thank you very much for joining me, Danny Nadri, who's from Shekel Brainweigh. Now, Danny, you're raising $1.6 million. To start with, perhaps, why do you need and want the money?
We pretty much said it right at the placement that we did about 2 weeks ago. So basically what we experienced in the last 3 months is even a higher growth that we've seen during the year. We've seen a book build of about 168%. With it, right towards the end of the year, management thought that adding additional funds would allow them a more ambitious business plan. This immediate fundraising, which include the placement, and this is the second phase of an SPP, is really to support a much higher growth than expected.
Well, indeed, just a few days ago, you released an announcement that declared there'd been record revenue. Can you tell me about that?
Pretty much as we expected early in the year, we positioned both divisions into growth. So both of them saw opportunities and they thought they could capture them. The main driver was the scale division that is now 21.7 million US, up from something like 16.5, I believe, million in 2020. So they saw really a nice growth coming from new clients, predominantly in Europe, but also returning clients on the healthcare business. And the other growth is in our new venture, our new startup, if you will, that grew 247% this year. So the first time that we see exponential growth, which is so typical of successful startup, that you start to see revenue jumping in multipliers and not just 15, 20%. So this is a combination of the two divisions acting well this year, both the scale division and the exciting new startup, if you will.
And for those investors who don't know, what is the startup in a nutshell?
We took our core competency in sensor technology. We added quite a lot of artificial intelligence and machine learning capability, and we created a new building block of technology, if you will, a talking shelf. And now we put it into smart fridges, and we put it into autonomous retail. Things that retail need today is really to automate processes. Similar to self-checkout, they need a lot more of this, understanding where products are on shelves, moving products in a much more seamless and frictionless shopping. And that's the type of trend that we support today with 3 or 4 different products. And these products started commercializing and we start to see the revenue. It's also a new business model, if you will, for Shekel, that we sell the hardware, but immediately a SaaS model kicks in. So we have now a residual revenue, which continues to come after we sell each of the products.
Now back to the capital raising, and you've extended the closing date for the SPP. Do you think that the time of the year, the festive season, has made it a little more difficult to raise funds than it normally would be?
I tend to agree. I think that the first week we released it was the 23rd of December and literally saw nothing in the first week. Probably people in Christmas and, Christmas just fell into this week, maybe not the best timing, if you will. We started to see better activity only in the last 3 days. So Tuesday, Wednesday, Thursday of this week is when we start to see more acceptance, which told us also your platform actually helped us analyzing comments from people saying they haven't received the documents. We took some help from Peloton and kind of a specific group that helps us with tracking the SPP. And they all led to the feeling that not all the shareholders had time or received the information in time. And management looking at it yesterday said, look, we got to give everybody the same chance to participate. This is a wonderful offer that is only limited to shareholders from Australia or New Zealand. Americans or Israelis cannot participate, so it's exclusive for them. And I guess we need another week to complete it.
How important is it to the company to get this money in now?
Look, it is important. The company is really hoping to put an ambitious budget going forward. So, having these funds is critical for us in order to push all the levers that we want to push. If it comes to it, it's great. If it doesn't, and we need to scale some of the activities, that's something that the company can do. The more we get, the more it allows us to pull these levers that we could do in Asia, in territories that we want to target, that we know the demand is coming, and do it quicker rather than kind of bootstrap from the funding. So the more we have, I think the better chances we have to do really well.
I guess one of the tricky things now is that you're raising at 20 cents and the shares are actually 20 cents on market.
True, but that's pretty much was expected when we did the placement at 20. So we thought the market will correct itself from 24 to roughly the raising price. Even a one shareholder that can buy 30 grand would have 150,000 shares, and that's not available on the screen at all, let alone 650 shareholders can buy up to 30 grand. These shares just doesn't exist on the screen today. Some would say that actually shareholders that buy today from the screen versus the SPP is actually benefiting another shareholder versus benefiting the company. So if you can actually buy from the SPP from a new shares that are issued, you help the company grow. You basically, it's a win-win, if you will, in terms of using the funds for the company to grow.
Well, I wish you all the best with that. Thank you so much for your time today. That's Danny Nadri, who's speaking for Shekel Brainweigh from New York. Thank you.
Thank you, Sonia.